Thank everybody for coming out today, and Happy New Year to our members of the financial press that are so dedicated to covering the work of our committee, and Happy New Year to all the financial services team members that are here and our members, our congressional members as well. I'm French Hill, and I have the privilege of chairing the House Financial Services Committee in this Congress. And I'm delighted to be with my colleagues today and let you help us unveil our Main Street Capital Access Act, which is a culmination of all the work we did in 2025 on coming up with ideas from all of our members on how to enhance the role community banks play in our economy. Our local banks, our local credit unions are so essential to what we call Main Street, the Main Street economy. You know, Treasury Secretary Bessent gave a talk early in the Trump administration in his Treasury secretaryship where he said, Wall Street's doing okay, but it's Main Street's turn. And he talked about crafting a parallel prosperity. And I thought it was really a good term. And for all the work that we've done collectively in this committee, we've been focused on that parallel prosperity. In 2025, we walked through how do we have rules of the road for digital assets as the financial services companies and activities move to a blockchain. How do we have those rules of the road? And Chairman Stile did a terrific job navigating that. Chairman Barr, Vice Chairman Loudermilk have worked mightily during the year on our community banking priorities. Capital Markets Chair Ann Wagner and our former Capital Markets Chair, now our Vice Chair, Bill Huizenga, worked mightily on what became the INVEST Act that we passed across the House floor. And then at the end of the year, with Chairman Flood's good work, and we passed a bipartisan housing bill for the first time in a long time out of this committee, unanimously, highlighting what we think we need to do to have access, more families to have access to housing and more families access to affordable housing. Important considerations, but it's part of that putting Main Street first. Each of those committees about driving the ability to have prosperity out to Main Street and not just have it concentrated on the coasts. So that's been a theme that we've had all of 2025, and today we unveil of that community banking piece. The work we did all year, we've put together in a set of bills that I think will enhance the role for community banks. And I'm going to ask, if I might, Representative Loudermilk, the Vice Chairman of our Financial Services Committee, to step up and talk a little bit about what's in the bill.
Thank you, Chairman Hill. It's a real pleasure to not only be on this committee, but to serve with my good friend, Chairman French Hill. This has been quite a busy year for us last year, and we anticipate a lot of good productivity going into this year. I appreciate the opportunity to be here today to highlight the hard work and accomplishments and priorities of the Subcommittee on Financial Institutions. Now, as we move into the new year, my colleagues and I recognize that coming off a successful 2025, we have strong momentum and a unique opportunity to continue delivering a financial system that benefits American families and businesses. Over the past year, our subcommittee has eliminated Biden-era rules that would have absolutely crippled banks with more unnecessary burdensome regulations, and we've eliminated expedited regulatory merger reviews. The subcommittee has also held a series of hearings to chart a path forward for reinvigorating community banking in America. The culmination of that work is the Main Street Capital Access Act that we are here to discuss today. There's nothing more important than this type of legislation because it impacts virtually every American and every demographic. And so it's very important that we get this right. So I'd like to highlight some of the specific successes of the committee from 2025, the Financial Institutions Subcommittee. It was a very productive year for the subcommittee, and we had over 30 of the subcommittee's bills pass out of the full committee, 3 of which have already been signed into law. We remain committed to the right sizing, regulation, and reducing regulatory overreach so that financial institutions can better serve American families, workers, and importantly, small businesses. The subcommittee repealed a Biden-era rule from the Office of the Comptroller of the Currency that would have eliminated the OCC's expedited merger reviews, thereby preserving an element of efficiency within government. We advanced legislation to tailor bank regulations to reflect institution size, risk profile, and business model, all in the name of combating Dodd-Frank overreach that has fueled industry consolidation and reduced consumer choice. We were also able to advance 3 of my own pieces of legislation, the America First Act, the New Bank Act, and the Taylor Act. These pieces of legislation are aimed at reducing regulatory overreach and provide meaningful relief for the banking sector, assessing the barriers to the creation of new banks and credit unions and ensuring our financial institutions are free from undue foreign influence. Community leaders are the backbone of everyday America. They serve families, farmers, small businesses, and local economies, ensuring Americans have safe access to a robust and competitive community banking market. It's essential to maintaining America's way of life. I'm proud of what we have accomplished so far in support of the chairman's Making Community Banking Great Again agenda. Where did you get that from? That's awesome. That's just an incredible stroke of genius. For the next year, our guiding principles will continue to be promote the health of the banking sector by tailoring regulations, strengthening bank funding, increasing transparency in bank supervision and resolutions, and promoting competition and facilitating innovation. I believe that Chairman Hill's and Chairman Barr's Main Street Act will do just that. Thank you again, and now I'd like to turn the mic over to my good friend, Representative Huizenga.
Thank you, Barry. And I'm Bill Huizenga, and I have the pleasure of serving as the vice chair of the full committee along with Chairman Hill. And these are some issues that we've been working on for a long, long time. I came in the 2010 election where the Republicans took the majority. And I was the first part of the first class that was after Dodd-Frank's passage. And since that day I was sworn in, we have been living with the echo effects of Dodd-Frank, and frankly, I think almost all of us up here have come in just post-Dodd-Frank, and yet here we are 15, 16 years later, and we are still unwinding some of the issues that were created by that. But I do want to thank Chairman Hill and Chairman Andy Barr for their work on these very important issues. As I said, when I first came here, we had a very focused agenda about trying to figure out how this was going to work in a Dodd-Frank, post-Dodd-Frank era. And Chairman Jeb Hensarling at the time was very much all of us were in kind of a reactionary mode to that and trying to unwind those provisions. And we had now this period of time where we're kind of flipping that around, where we are now going on the offense and we are ready to make sure that we put a much more positive stamp on banking, because here's the reality of it. We have seen community banks disappear. We have seen small rural areas lose those vital financial institutions that they have had. Consolidation has just been rampant, and oftentimes we've seen regulators say, you know what, we would like to see fewer institutions that we have to regulate. And that has undermined the health of our overall financial system. And I think it's time to restore that. So I'm very proud to have a few bills in this package as well, 3 of them as a matter of fact. The Stress Testing, Accountability, and Transparency Act requires the Federal Reserve Board to issue regulations to establish the models, assumptions, and scenarios used in annual stress tests, which serve as the basis for covered bank organizations' stress capital buffers, those SCBs as they're called, and what those requirements are. And oftentimes, those that are having to go through these stress tests don't really know what the parameters of the test are. And we're going to help lay that out. The second bill I have is the FDIC Board Accountability Act, which is aiming to strengthen the professional qualifications and the governance of the FDIC Board of Directors. And frankly, this last term, I had the opportunity to chair the Oversight and Investigations Committee. And the work that myself and Andy Barr, as chair of the Financial Institutions Committee, did as we were looking at the abuses that were happening within the FDIC, led by Marty Grunberg, which ultimately led to his removal. There are significant issues in both the management as well as the operations of the FDIC. And we are working to make sure that that doesn't happen again, because we cannot put and subject our financial institutions through that again. The third bill is the Enhancing Bank Resolution Participation Act, which directs the federal banking agencies to jointly study and report to Congress on the OCC's historical use of what we call shelf charters and the FDIC's use of modified bidder qualification processes. And again, going back to that time as chair of the Oversight Committee, Subcommittee, this was when we saw the SVB, Silicon Valley Bank, and other banks have these issues, sometimes for very different reasons. It could be mismanagement, it was maybe bad risk management, but what we know is that there was too much of a lag in between the problem and the solution. And what we are attempting to do now is to make sure that we've got some sort of preset, modeled institutions that can be ready to go if and when, heaven forbid, that we see this again, that we're able to take those off the shelf and be able to move ahead very, very quickly and efficiently, and again, to restore the confidence and the health of those financial institutions. And we think these are all very, very positive steps, and we've got a great package here. Deeply appreciate the opportunity to work with Chairman Hill and all of our colleagues on this, and I think with that, Chairman Hill is going to take a few questions.
Well, first, let me recognize the chairs that have worked on substantive legislation this year, but I wanted to ask Warren Davidson before he slips out, thank you for your leadership on national security. He's got a big agenda for 2025. You'll hear more from him in coming days. And Dan Muser, thank you for chairing our Oversight Committee. I hope all of you read our debanking report that we released just before Christmas. Thank you, Dan, for your work there and following up from last year's Oversight Committee. We'll now take questions and appreciate everybody being here today. Yes, ma'am. I mean, well, look, this is something I think it's really important. We've talked about it among ourselves quite a bit. The issue for the committee has been, going back to Blaine Luetkemeier's good work in the Obama administration on what we call Operation Choke Point 1.0, to Bill's work and Dan's work on Operation Choke Point 2.0, is where the federal government puts their thumb on the scale, directing a regulated entity not to do business with a particular business because it's unfavored by them. That's debanking. And so I don't anticipate us moving legislation questioning whether a banker has made a prudential safety and soundness decision or made some other board of directors governance decision. We want them to make that. We understand the Small Business Administration. We understand that the administration's asking these questions. We obviously haven't seen any of those answers, so we might wait and let's see what the executive branch produces in their request for information. But traditionally, you want that board of directors, that executive management team to take a decision that's in the best interest of the depositors and shareholders and governance of the bank about who they do business with. So, thank you. Yes, sir. So that's our breaking news midday, and I've heard that he has said it, but I haven't seen it. So I look forward to reading what the administration puts out on that, and I'll let you know once I read it. Such a good question. Question was about 21st century housing. This is a priority for Chairman Scott in the Senate, and certainly a priority for our committee, Chairman Flood, all the members of his subcommittee, and our full committee. On both sides of the aisle, we had quite an exceptional markup and a strong bipartisan vote for that. So I hope to work with the administration and the Senate on a path forward for housing legislation there that the president can sign into law. Emily? So all these bills have been through the committee process, and all these bills have been marked up. So we'll introduce the bill this week. We'll urge the leadership to consider it for floor action. We're going to talk to our friends on the other side of the aisle to see if they have additional things they might be interested in. So we'll have those conversations, and we'll have a similar conversation over in the Senate to see what they think about it and what suggestions they're thinking about over there. But the bottom line is this package would be ready to move to the House floor. Mark? None of them are, we haven't been on suspension on any of these, I don't think, no. But that we had in the INVEST Act, we had some bills go across the floor on suspension. Here's my logic and my philosophy about this. Sure, yeah, of course. And Vice Chairman Heisinger will understand this too. My personal vision about legislating is to do a portfolio approach where our subcommittees produce ideas and we keep them as individual bills for the most part to get them through committee so we can maximize the ability to make them bipartisan or to find any kind of sort of nick in the bill that we want to correct. So instead of rolling things into a giant bill, one of my first bills I got to vote on when I came to Congress in 2015 was Chairman Hensherling's Financial Choice Act, which was, and Barry and I were freshmen together. It was a great piece of legislation, but in it, it was across the board on everything. It took on the Federal Reserve, it took on Fannie and Freddie, it took on the banks, and we had members on both sides of the aisle say, you know, if you take out Title so-and-so, I could vote for the bill. So my view was, let's try, it's more work on the part of our members, but let's move as many bills as we can in smaller groups or standalone through having more markups and then stitch them together for consideration on the floor action. This also, I think, is helpful in an environment where the Republicans or a political party have the House, the Senate, and the White House, because it gives you the ability to have more legislative material that's been through committee, been through regular order, been voted on, been amended, and then you've got the optionality of putting it together in different packages. So to Emily's point, yes, we've walked through committee on all these bills. They've been marked up, amended, joined. We have a record on who voted for them. Now it's talking about it as a priority. If you believe Main Street's a priority, let's move a package of bills across the House floor that benefits our Main Street institutions, our community banks, and our credit unions. Does that answer your question? Yeah, Alex? Yeah, with no offense to anyone who lives in New York or Charlotte, I think we have representatives nearby. So I spent a good part of my career in commercial banking, both for a big publicly traded company, the biggest publicly traded company between LA and New York for over 3 years, and then a publicly traded regional company headquartered in my hometown of Little Rock, and then I broke away from that and did a bank startup, a de novo startup bank. So I've been across this spectrum, and I know that tailored regulations based on size, risk, business mission, complexity is a critical element. And many of us were in the Congress in 2018 when President Trump signed into law 2155, S-2155, Mike Crapo of Idaho's good bill, where it promised more tailoring. And then we saw it unraveled. in the Biden administration. So I believe in tailoring based on my own financial experience, and I think all the people, the men and women on this committee who have business backgrounds, legal backgrounds, also share that philosophy. But we're trying to target this, get it to be bipartisan, and narrowly craft that tailoring and get it into statute. Because the other component is the flip-flop between a Democratic administration and a Republican administration. We're trying to get things in law that we think are common sense, they're bipartisan, they produce a safer, a sounder banking system based on complexity, risk, and size, and will not have this flip-flop of one administration trying to undo rules of another administration. I think getting it in statute is important, and that's why we're committed to the work we're doing.
Mind if I say something?
Yeah, please, if you would.
That was actually part of my point in my introduction as well. You know, we have seen this reduction in options and choices, especially in rural areas. And in my old configuration of my district in Michigan, I had the poorest county in the Lower Peninsula and was one of the top 3 or 4 poorest counties in the state of Michigan. There was one bank. After there were some other branches that left, and that one community bank is really the center of the community. And I talked to the woman who runs it. It's been in her family, and the pressures that she was feeling, and this flip flop, like the chairman was saying, and suddenly, you know, she's a bank in the millions, and she's having to be regulated like she's a billion or trillion dollar size bank. It's caused this instability, and that really, I think, is hopefully one of those things that we're going to be able to blunt with this.
Yeah. I mean, a prime example, Alex, is banks under $10 billion in this country make 2/3 of the home construction loans. And that is Main Street. There's nothing more Main Street than providing safe, affordable housing for people, and that construction function is disproportionately made by our very local, very connected to the community, credit unions and Main Street banks. Yes, ma'am. Okay. Yeah. So we didn't have a specific discussion about reconciliation and inclusion yesterday when the House Republicans were together retreating on the topic generally of legislative outlook. And we had a $1 billion mark in FY26, and we were able to achieve $5 billion in savings. And as you know, some of those things the Senate parliamentarian kicked out, and in other instances, the Senate just chose to go a different direction. But we're proud of the work we did of the first cap in 15 years from Dodd-Frank on limiting the funding for the CFPB. Our members are generally supportive of making another effort at budget reconciliation. I mean, my best advice to the Speaker is, this is a tool of the majority. We have majorities in the House and Senate. We ought to have the option of considering it. We could reject it if we don't find something. But I'm hearing from members around the conference that, you know, it's a good idea. So we'll revisit, to answer your question, some of the things we looked at last time. We are not what's considered a reconciliation targeted committee because we have minimal avenues that would be subject to budget reconciliation. But we'll look back and have an after-action look at how the Senate reviewed our work, how the Senate parliamentarian reviewed our work, and see what we can do. But I'm personally supportive of the House considering, first of all, doing a budget, and secondly, using budget reconciliation. Yeah, yes, ma'am. Well, Eleanor, no, we didn't address the bigger issue on deposit insurance that we had the hearing on in this package, although we addressed it modestly in the sense that we, for the first time, had strong bipartisan approaches to reciprocal deposits, which was Mr. Emmer's bill, custodial deposits, which was a bill I put over because I know those are so beneficial to Main Street banks. And they've been asking for it, and we've never had a bipartisan consensus to move those, and we moved them overwhelmingly, and they are in this package, and that's a big step forward that supports Main Street funding. We also changed the definition of a small bank holding company, which allows them to use subordinated debt or preferred stock as a funding, which is another tool for adding the ability for a smaller company to grow. And then because we were involved in the shutdown, we didn't get to have a broader conversation about other aspects in the deposit insurance reform area. We want to be data-driven there. We'll use our new, now fully confirmed chair, Travis Hill, to give us advice and counsel on that. So this bill is not static. We'll continue to work both with Republicans and Democrats here in the House before we would go to the floor if we could add something else. But this is what, at the time, I thought was a very strong consensus package that benefited Main Street banks, and including benefiting them from access to better funding, which this bill does. Yes, ma'am.
So I've got a community bank question, although it's not related to these specific package of bills. As you know, your colleagues over in the Senate are currently working on a market structure bill, one of the big debates.
Yeah.
Going to be able to offer rewards that look like interest. I know obviously banks, particularly community banks, have kind of said that if they are allowed to continue offering those rewards that are like interest, that would be really detrimental to them. I just wanted to see if you had any position or anything you want to weigh in on as your Senate colleagues were figuring that out.
Well, I'll certainly express my opinion and invite, Chairman Stahl has disappeared now, I guess, but I would, he must have known you were going to ask the question. Just kidding, that's off the record. So in this committee, for the last 4 years, we've worked on this issue mightily on designing a stablecoin regime and a market structure regime, and in that we've had bipartisan consensus that stablecoins would not pay interest, that in fact it is a payment token to be used on a blockchain rail, and that's all it is. It's just another way to make a payment if you want to use a cross-border payment or program payments, and we've had a lot of work on it. So I think the Clarity Act that we passed and the way Genius was written is right, which is that we said they can't pay interest. The assertion is that someone is asserting that, well, they can pay interest through another mechanism, which, may be true, may not be true, but that's the assertion. So that debate's going on in the Senate. And I'm going to let them figure out what they think is the best course of action. But if somebody asked me for a recommendation, I would say use the language that we have in Genius or Clarity and have the Treasury rulemaking address that issue quite specifically in the rulemaking that's now pending before the Treasury Department. And in the advance notice or request for information, the Treasury asked a lot of very good questions about that very specific point. Anybody else? Does Mark get another one, Brooke, you think? Okay. Sure. Well, there's quite a bit of overlap, and I think we can find a very comfortable place that members on both sides of the Capitol who have priorities in housing can find a place to land and have a bill that improves capital for housing, access to housing, and increases affordability. Here in the House, we've been geared more towards the private sector and private sector incentives and not setting up new HUD programs or spending more funding. So that's certainly a difference between the two chambers. But housing is something that brings members together. That may not be how the financial press considers it, but it's true because there are things that we need to do that can enhance the housing situation, and one of them is having more robust, successful community banks and credit unions. They do almost 2/3 of the home construction lending across the whole country, and that's where we have a huge shortage. And so I think that's important. We reduce regulations. We make it easier for a veteran to apply for a mortgage. We remove some red tape on the construction techniques. Chairman Flood is here. He's done a good job on the home program at HUD, And just like Chairman Westerman on natural resources has tried to reduce federal regulatory barriers on permitting and access to federal lands, Mike Flood and his colleagues have taken the same approach on lowering the regulatory burden, for home construction. And that'll be the direction that we take. Jasper, you walked out, and now you walked back in, but because I love you, I'm going to let you ask the last question.
Well, I appreciate that. I'm going to try again on the housing issue. So I understand you haven't seen what Trump has put out, but this idea of getting private equity out of the home market has been around for some time, mostly from the left. As a general matter, I mean, what is your view on banning institutional investors from owning?
Well, that's why I want to read it, because as you say, this was a big issue in the pandemic, if my memory is right, and that can mean a lot of different things, and that's why I don't want to generalize and give an impromptu answer for something that I haven't read. We need more capital, in housing for people to have a place to own or rent, and so I want to look at it and see what the output is. Thank you all so much for being here. We appreciate you, and thanks for helping us tell the story. Take a picture. Yeah, if the members would just scoot in a little bit, we'll take a picture.